Over the last few weeks, I have been looking at how you can integrate the idea of engulfing patterns to trade volatility 75 index. And you can see I am now on the volatility 75 index, and over the past few days of backtesting, I have realized it is something that you can actually apply on volatility 75 index. Now, if you've watched my previous videos for trading the boom and crash indices using the engulfing patterns, you'll realize I kept on saying, or I kept on repeating that you can wait for significant retracement, and then after a retracement you wait for the formation of an engulfing pattern, and then you get into a trade considering the engulfing pattern you have had. So I'll just put that in a text right here. Wait for significant retracement, then wait for formation of an engulfing pattern, and then get an entry around the pattern. Actually, an entry, get a trade entry and exit around the trade, the engulfing pattern. So that is the whole idea behind it, and we are now bringing this idea to volatility 75 index. And now for our retracement, for the concept of retracement or waiting for retracement, we are now going to employ the use of the retracement tool, or the Fibonacci tool. So now for the retracement tool, we are introducing the retracement tool to help us get ideas of which trades we can take and which ones to avoid. So in this case, we want our retracement tool to be giving us engulfing patterns in the 61% of the retracement tool, or the dealing range. You can say the dealing range, or you can say the retracement tool. So I'll just start off with an example right here. You can see we had a move from this point to this point, and then a retracement. So bringing in your Fibonacci tool or your dealing range tool, whichever tool you choose to use. So this is 61.8, I want to believe 61.8 to 78. So this zone right here is where we want price to react off from and give us a dealing an engulfing pattern from it. So you can see that is what we have, and if that is bound to happen, then we are expecting that a dealing range, not a dealing range, but an engulfing pattern will form out of this zone and then give us sell ideas. And that is why I have this arrow here to show us how you could engage. So you can see price comes to this 61% and then drops retracement. This tiny retracement here gives us an engulfing pattern. This bearish engulfing pattern gives us a sell idea. Now there are two ways to engage, and you can engage in both ways at the same time. The first way is to get an entry after the close of that engulfing pattern or engulfing candle right there. So you see that engulfing candle, it closes, and then you get your let me return my Fibonacci tool. So you want to target these lows here, or the first point of this Fibonacci tool. the second way to engage this idea is an engulfing candle forms, and then you wait for retracement to the 50% of this engulfing candle, right? So in a nutshell, you just need to get maybe a rectangle. This rectangle should give you a midpoint. Do we have a midpoint for this? Yeah, middle line. Okay, so a midpoint or a middle line, and then you want to get an entry at the midline of this rectangle, or at the center of this engulfing candle, and then you sell and stop loss just above that engulfing candle and take profit at the beginning of this retracement, which is that spot right there. So those are the two ways to engage, and you can actually use both of them at the same time. The first entry at the close of the engulfing candle, the second entry at the 50% of the engulfing candle. So that is just one example. Let me look at other examples that I've seen, and the previous recent price action from this point to this point. You can see we had a very significant move, and then price retraces to the 61% of this dealing range, and then we want this point actually to get an engulfing candle. You can see we had the first one, but it stopped us out, and then the second one giving us another engulfing candle, and now you engage at that point. So you have your buys at the close of that candle, and you take profit at the beginning of that retracement. You can see you have a 3.56. The stop loss is just below that engulfing candle. So that is another example. Let's look at another one. You can see we had significant price moving lower from this point to this point, and then we have price now retracing to the 61% of this Fibonacci or the dealing range, and then we have an engulfing candle to the lower side. So first way of engaging at the close of that candle, then stop loss just above it and take profit at the beginning of the retracement, or that swing low right there, and this would give you a 6.8. If you put your stop at the swing high, you have a 5.22. Second way of engaging, of course, I have shown you the two ways of engaging this trade. Such trades, if price is retracing or going into a drawdown, you just wait for price to get to the 50% of this dealing range, and then you place your sells at the 50% and stop loss just above that swing high or above this that's engulfing candle, and target your lows at this point, which is the beginning of that retracement. And this one gave you a very sweet risk reward ratio of 9.43. Let's look at a few more examples and then we can close. I had identified these examples. This is also good. You can see significant move to the downside, engulfing candle, close of that engulfing candle, you enter. Or if this one gets you stopped out, you can get into this second one, and the second one was a good one because you can see right there stop loss above it and take profit at the beginning of that retracement, which is 3.14. so that was a good one. Let's try and see if we had any other. Yeah, we had one here. Price starting from this point to this point and giving us this dealing range, and price retracing to the 61% of this dealing range and giving us a bearish engulfing pattern, and then entry at the close of that bearish engulfing candle, stop loss just above it, and now you have your take profit just below that retracement, at the beginning of that retracement. Second way of engaging is 50% of the dealing range, or 50% of the engulfing candle, like that, at this point, which is not really far away from our initial entry, but it significantly improves our risk to reward ratio. So you can have a look at this and see that you had a 6.23 risk to reward ratio if you had considered taking that. So that is the second way of engaging, and this point gave us several entry points, like several trading opportunities. You can see there was another example right here, price moving from this point all the way to this point, and then we have a significant retracement to the 60% of this dealing range or the Fibonacci tool, and then we have an engulfing candle to the upside, or a bullish engulfing pattern. At the close of that pattern or the candle, you get an entry, stop loss at that swing low, and take profit at this high right here. So you'll notice most of these trades are giving you a consistent 3.5 risk to reward ratio, 3.5, 3.4, 3.3 risk to reward ratio. And the second way of engaging, as I have told you, 50% of the engulfing candle, once price retraces into it, you want to get an entry like this right here, then stop loss just below that engulfing candle, and take profit is at the swing high that pushed this retracement, right? So, and this one gives you a good 5.76, yeah, so that is good. Now let's look if there was another opportunity. Very many opportunities right here, so I'll remove this. Actually, this was an opportunity as well. So you can see we had, let me delete and redraw it afresh, price moving from this point to this point, and then we had a significant retracement. So dealing range or Fibonacci tool from here to here, and then retracement into the 60% of this dealing range. Engulfing candle, this is a bearish engulfing candle. We had the first one, but probably got stopped out because of this high right here this week, and then a bearish engulfing candle, the second one, and you get an entry at the close of that candle, and you target these lows right here. So you can see price playing around a lot, and then eventually it hits it. So second way of engaging is 50% of dealing range. Let's just mark that. Let me use the rectangle tool. So the rectangle, 50% of that engulfing candle, and you get in at that point right here, and stop loss above this engulfing candle, take profit at the beginning of this swing retracement, not a swing, retracement, and you can see price playing around until it gives us that 7.61 risk to reward ratio. And I had said this is also an opportunity. You can see price significantly moved from this point to this point, and then you had price retracing to the 60% and tapping into the 78% of this dealing range, and then you have an engulfing candle. Though this is not the best engulfing candle, because you have a bullish candle here first before going up, but that was a good opportunity. Someone would have ridden on it. So let us look at one or two more examples, and then you can close it at that point. So look at this, price moving from this point to this point, then an aggressive retracement to the 60% or the 61%, and then price giving us a bearish engulfing pattern. Close of that engulfing candle, take a sell right there, stop loss above that engulfing candle, take profit just at this level where the retracement began, and you have a 4.4R. Second way of engaging is get that 50% of this engulfing candle. And remember, the engulfing candle, it will include the wick, not the body of the candle. So the entire candle, then the 50%, you get an entry there at the 50%, and you place your stop loss just above the engulfing candle and target the same lows or the same level that pushed price higher, like that. And you have a very sweet 9.42R that did not have major retracements. So I think the final example, or two more examples, we have, let me remove this now. We have price giving us a significant move to the upside, retracement to the 50%, engulfing candle, and this one you just had one way of engaging. The first way is at the close of the candle, stop loss below the engulfing candle, and take profit at this point right here. You can see these relative equal highs that pushed price to the lower side, and unfortunately, if you did not manage your trade well, you hit a stop loss. But this was 5.49. You would have gotten maybe a 4R or a 3R, right, like that. And then now finally the last one, I think this should be the last one. So price moving from this point to this point, and then retracement, engulfing candle at the sells at the beginning, the close of that engulfing candle, and target this low here that gave us that retracement, 4.46R, or get a 50% of the engulfing candle like this, and then get an entry at the 50%, stop loss just above that engulfing candle, and take profit at this level. This was 7.49, and you can see this one gave us another engulfing candle to confirm that price is going to move lower. So that is how you can trade the volatility 75 index using Fibonacci tool or Fibonacci retracement tool and engulfing patterns. So I'll just rewrite that text right here. Wait for a retracement, mark it using the Fibb tool, and then wait for formation of an engulfing pattern at the 61% of the Fibb tool. Then two ways to engage the trade is enter at the close of the engulfing candle, or enter at the 50% of the engulfing candle. And that's it. I hope you've learned something. You can go and backtest it, check it out and see if it will work for you. Until next time, bye bye. Happy trading time.